Hey everyone, in today's video, I'm going to be talking about 5 stocks that I bought here in the market today. I put about $2,500 into my account to buy these 5 stocks. So we're going to go through them one by one here. One of them was actually a new stock that I just purchased in my account today. So I'm going to save that one for last. As I'm going into this, just wanted to do a shout out for if you like this type of content to please consider liking the video. It really does help out with the YouTube algorithm. I really appreciate it a lot. As you can see, just before jumping into it, I have both a Canadian and a USD account here on this brokerage account, but primarily it is currently in on the Canadian side, about 2/3 after foreign exchange. But I did buy both US and Canadian stocks today. The first stock that I bought was actually Coca-Cola. So Coca-Cola here is a position that I recently started, and today I went from 90 shares in this account to 100 shares. So bought about $600 USD of Coca-Cola shares. You can kind of see in the last month here, it's been dipping down 6% just in the last month. So I started my position in the high 50s. It went all the way up to 64, 65 bucks. I didn't want to add to it there. Now that it's dropped 6%, trying to take advantage of that to try to get this to more of a full position. I believe they pay a dividend of about 46 cents a share per quarter. So I'm getting about $200 USD a year from this position, about $50 USD a quarter, paying a 3% dividend yield. But they also increase the dividend every single year, even if it's just 3, 4, 5%. So looking forward to my 3% yield on cost that I got down here, growing with time, and them hopefully increasing their earnings per share as well. Currently, they're estimated to do, I believe, about $2.50. So we're trading right at about a 24 times price to earnings ratio. So definitely not cheap, but I do like the diversity of this company from a geographical perspective, the position they have in the beverage space, and their history of being a dividend king and producing shareholder returns over long periods of time. The second stock here on my US side that I did invest in a bit more today was Visa. I just bought 2 shares of Visa here earlier on in the day. It looks like it rallied a bit to close the day. But Visa is one of my favorite stocks for 2023. They're estimated to do about $8 of EPS. So we're trading right around 28 times earnings. But I think they're going to continue to grow their earnings and their revenues by double digits year in and year out for quite a while here. So I think looking back, even 2025, I would have bought this company closer to 20 times their earnings at that point. So I really like this company, really like the business, really like the capital allocation. They continue to buy back shares, pay out bigger and bigger dividends every year, even though it's a small 0.8, 0.9% starting yield here. I think long term, I'm going to do really well with this one. Going into my third stock that I bought here today, going over to the Canadian side, it was a bank. It was Scotiabank. Scotiabank is a Canadian bank primarily, but they do also operate in Latin America, like Peru, Chile, Mexico, etc. So they do have some diversification from the Canadian bank space, which is a space that I do have more than just their stock in. So it's good to have some banking diversification outside of Canada and the US. Over the last year, this company's gotten trounced, down almost 20%, given just their mortgage book exposure in Canada and then also some instability in their Latin America business. So it's really moved the stock down to be at a 6.25% dividend yield. This company has increased their dividend like almost every year in the last 50 years at a really respectable pace, not just 1 or 2% a year. So if they can get back to that, and I'm buying in a 6.3% starting yield, it's a chance that by the end of the decade even, I'm going to have a yield on cost of 10% of what I'm buying shares for today. So really looking forward to them turning it around with time and to continue increasing their dividend. And I think buying the Canadian banks at a discount is always a good idea. They tend to do very well over the long periods of time. They're essentially an oligopoly in the Canadian market. The price to earnings on this stock, it says trailing 9.7, but I'm pretty sure on current year estimates, they're trading just under 9. So you're getting essentially an 11 to 12% cash flow yield. You're getting half of it paid to you in a dividend, the other half for them to deleverage, buy back shares, acquire new businesses, whatever it may be. I think the valuation is really attractive at these rates. So that's why that is the third stock that I went ahead and bought here today. The fourth stock is a position that I've been building out pretty aggressively over the last 6 months or so. It is A&W Royalty Corp. I've talked about the stock a lot. I'm really trying to get the 500 shares, so currently sitting at 480. They pay 16 cents a share a month in royalty payments currently. So once I get the 500 shares, I'll be getting $80 a month just in royalty income from people who are dining at A&W restaurants. What's been really helpful as well over the last 6 months or so, especially, you can kind of see their last 1 year chart here. They've been pretty flat to actually trending down slightly, and lots of the other royalty funds in Canada have actually been trending upwards. So it's made this one really easy to buy into. I really like how they actually tend to increase their dividends, their royalty payments on a year in year out basis. Obviously an output from their same store sales growth going up and their locations going up, which tend to be the trend over the last 10 to 20 years. So really looking forward to filling out this position to 500 shares, paying a 5.3% starting dividend, and it won't increase to the same extent of a Visa in terms of double-digit increases. But looking forward to getting, the annual 2, 3, 4% raise on A&W on top of that already really nice starting dividend yield of over 5% that gets paid out monthly. So almost done buying into this one for the time being at least. Just need 20 more shares. We'll probably get it done over the next couple weeks. And the fifth and final stock that I bought here today was actually a new position to my portfolio. It was Jamieson Wellness. So I talked about this one on my watch list on one of my prior videos. Jamieson Wellness is a wellness company, obviously, but they sell consumer products in the vitamin space, the protein space. They mainly operate in Canada, but they have been fast expanding in China. They just bought out their distributor there. They also have a big European business, which is their international unit. And then they also just bought out a brand that operates in the United States on the West Coast called U Theory of premium vitamins there. A lot of direct-to-consumer business on that brand. And I think it's a lot going on for this company. First of all, they're expected to do about $1.65 in earnings per share this year. So they're trading at about 18 times current year earnings. They've grown their earnings per share double digits over the long term. So they have a really good track record for a company trading under 20 times in the wellness space, which has been picking up steam over the last 10 years, and I expect to continue. They also just have a lot of distribution opportunities. Their namesake brand, Jamieson, doesn't exist in the US, but they just bought U Theory in the US, so they talked about the synergies of using that as a catalyst to expand Jamieson distribution into the US, which would be a big play given how big their Canadian business up north is. They also have such a long runway in China, and they have a global partnership with Costco where they're pretty much in all the Costcos around the world. It's a really productive business for them. So lots of growth avenues for this company without even needing to change the game on innovation or product. So I think all that upside with a price to earnings ratio under 20. It was one that I started nibbling into today. Only 10 shares, so about $300. But if this stock continues to trend down and I get it for mid-teens multiples, would be more than happy to build this into a real position within my portfolio. So there you have it, guys. Those are the 5 stocks that I bought here today in the stock market. If you like this type of content, be sure to subscribe to my channel. I did another video very recently just going over my entire portfolio. If you guys are interested in that, I'll link it at the end of this video. But just wanted to say thank you if you guys made it to the end of the video. Once again, please give this video a thumbs up. For smaller channels like me, it really does help with the YouTube algorithm. And I'll see you guys in the next one.